Have you ever looked at your bank account after finishing a big project and thought, I worked for weeks. Where did all the money go? You're not alone. Most small construction business owners think they're making profit, but in reality, they're barely breaking even. Today, I'll show you the truth about profits in small construction businesses, and what you can do to finally keep more of what you earn. Let's start with something simple. Revenue is not profit. Just because you landed a $20,000 project doesn't mean you made $20,000. That's your gross revenue, not your profit. After you pay for materials, labor, gas, insurance, tools, and taxes, you might be left with only a few $1,000s, or less. That's the hard truth most people ignore. Now, the second truth: being busy doesn't mean you're profitable. I've seen contractors running from job to job, always working, always tired, but they can't explain where the money goes. The reason? They never track their costs, and they never separate profit from expenses. You can't grow what you don't measure. Let me give you a real example. Imagine you just finished a basement renovation for $30,000. Materials cost you $10,000. You paid your crew $12,000. You spent $1,000 on fuel, tools, and insurance. That's already $23,000. Now, if you only charged $30,000, you made $7,000 before taxes, and if the job took a month, that's not as much as it sounds. After taxes, you might take home $5,000. And that's if nothing went wrong. That's the real face of profit for many small construction owners. Here's the truth nobody talks about. Profit isn't what's left after paying bills, it's what you planned for from the start. Every successful construction company builds profit into every quote. That means when you estimate a job, you don't just add materials and labor. You add overhead, contingency, and profit margin on top. If you don't include profit, you'll always stay stuck chasing the next paycheck. Let's talk numbers. A healthy profit margin for a small construction business should be between 15% and 25%. If your total project cost is $10,000, your selling price should be at least $11,500 to $12,500. That's not overcharging, that's staying alive. Your business needs profit to grow. Profit pays for your next truck, your next employee, and your freedom. Another mistake many small contractors make is mixing business and personal money. You can't tell if you're making profit if you're paying personal bills straight from your business account. Keep your business money separate. Pay yourself a fixed owner's draw or salary. That way, you can clearly see what your business is actually earning. Let's go deeper. There are 3 levels of profit every construction owner should understand. Gross profit, what's left after materials and labor. Operating profit, what's left after overhead costs like fuel, tools, insurance, rent, and phone. Net profit, what's left after taxes and all expenses. Many small businesses think they're making profit because they only look at gross profit, but true success is measured at the net profit level. That's your real income. Here's a tip from experienced contractors: profit doesn't happen at the end, it happens in your estimate. If you price correctly and protect your margins from the start, your business will grow fast. If you underbid, you'll just stay busy forever. So before you send your next quote, ask yourself, am I pricing this job to survive? Or to succeed? Let's end with this: profit isn't greed. It's respect, for your time, your skill, and your risk. Every time you take on a project, you risk money, time, and reputation. You deserve to be rewarded fairly for that. Stop apologizing for your prices. If you deliver quality and professionalism, your clients will see the value. If you want me to make a video showing how to calculate your real profit margin step by step, comment profit guide below. And make sure you subscribe for more real construction business advice. Because in this channel, we don't just work hard, we work smart, and we get paid what we're worth.